Good morning, everybody, and welcome to the morning volatility report. It is I, Andrew Giovinazzi, Chief Operating Officer, OptionPit.com, filling in for Mark Sebastian. Condors and Butterfly course, Saturday, June 11th. It's about 3.5 hours, and by the time you're done, you'll understand why and how iron condors and butterflies will work for you. Okay? That's the simplest way we can describe it. They're very specific positions that do very specific things. Will it be on the schedule? Yes, Bob. It always shows up on the schedule, doesn't it? Somehow it does get there, usually on Friday. Alrighty. And with that, we'll get on to the vol report. This is where I think we should take a look. So the market's selling off. The jobs number was kind of dismal relative to the ADP number that came out. The ADP number came out. It looked okay. It wasn't great. But then the jobs number came out and it looked really anemic. About 38,000 jobs or something like that. Not very good. So that means rates don't go up and they crushed all the financials. Okay. TLT, I think that's a high for 2016. I'm pretty sure for treasuries. So as much as the Fed wants rates higher, I think the market is saying no. Right? And here we are. We're going to be trading, what, 133 something? All right. That is, we are actually close to the panic rates. When in January, when everybody was just kind of freaking out about the whole world kind of imploding and so forth and so forth. So, what the heck, right? We're trying to push rates higher, yet bond yields go lower. So central bankers at least look like they have lost whatever control they might have had for a while about where they can set rates. You can certainly raise them, but the activity in the bond market today, at least on the opening, this feels like it's a bit of a fadeable opening because the Fed looks like they're going to do what they're going to do anyway. But it just won't be till the second half of the year. Little bit of a squeeze, though, maybe, and some short covering here. But banks are probably a scoop here, maybe selling some out of the money put spreads, stuff like that. We'll take a look at that. Or XRT, I'm just looking at Goldman and JPM. All these got bid up in anticipation, and now there is the inevitable sadness. And I think probably just, out of the selling out of the money put spread, something like that. We're getting a little pop and vol, maybe broken wing butterflies on it, something where you can sell some of the downside in these things. Because I think you have to just be a little. I think you got to fade this a little bit, just a little bit. You don't have to go crazy, but volatility VIX took a good. It got pounded yesterday on expectation, I think, of a little bit better of a number than that came out. And from a high this morning, it's starting to back off a little bit. We'll see. It's only the first half hour of the day. But I think the banks kind of scoop. Oil is holding up, let's just say nicely. I think that's really kind of the bigger story. It's not moving. OPEC says they can't come up with a production caps, and oil actually rallied yesterday. So I think trades that aren't looking for a lot of upside, but you're not as worried about the downside, again, selling put spreads, buying call time spreads, something like that in the bigger producers probably will work okay. Because if oil is going to be stuck at $50 a barrel, those stocks aren't going to go anywhere. They're not going to go down a bunch, and that generally is a little bit better. So I think the financials, probably some kind of scoop action below the market, selling some put spreads don't look too bad. Oil looks stable. As far as volatility goes, you've got the Brexit coming up. I think the range, the low for vol tops will be 13 until late June, when I believe the vote's, the 23rd. It's after the ordinary cycle. So I think the next thing is we'll look today in our chat room, but I think we could actually take this opportunity, and you want to sell any part of the term structure, that's the short end. Any pop and vol here looks like it's going to go away. So we have the next Fed is going to have their next talk on what is the 15th and 16th. That's why you have a little bid for this stuff. I see now, I don't know how the Fed's going to do much. You can pick up the kind of the Brexit premium and sell this forward premium. I think that time spread is a purchase. And the SPY. We'll look at it today. We already have that on a little bit. But I think given the little bid you've got on it today, I think this is a good opportunity to buy it. Out of the money put spread like 207, 208, something like that. In that cycle, I think that would make a nice trade because those June puts probably are going to evaporate. The Fed's hand, it doesn't look like they're going to be able to do much as far as raising rates with the unemployment rate not great. And I think that will be a nice opportunity. So look in 208, 209. We'll check it out. And if you're fortunate enough to be an Option Pit Live member, we'll be able to check that out. Probably would make a decent double calendar as well. I just don't see that June vol holding up now. And with that, that's our agenda for our chat room today. That's my volatility agenda. I don't see a VIX going a whole lot lower for the next 3 weeks. I think it's kind of be range bound. We could see spikes. But other than that, I think kind of we might have seen the low in it yesterday. And with that, I will see you all later. Bye-bye.